All right, folks, let's go over the markets. We can go over ES, crude, and gold. So ES daily first on the left-hand side. We see a very clear rally with a breakout right there. Breakout on 18 times 100,000, so about 1.8 million. 1.8 million contracts right there, right? And how does it look on the middle time frame? Middle time frame and low time frame, I'm basically using the tape reading charts because I guess I just prefer it. Alright, so we had this reaccumulation here, this base, then you had a base breakout, which is basically an entry into markup. So we're in markup right now, and the last place where there was some reaccumulation is right here. I mean on a minor level, right here. How do you know? You just go to the lower time frame and you see, okay, pull back, pull back, pull back. It was making a little bit of lower lows, and 58,000, 58,000 contracts came in and initiated the higher high. Boom. And it started going up. There you go. Yeah? So, anyway, so we'll see if it comes back to that area. You have a nice POC, all that volume, etc., etc. The price goes there. We're going to see how it reacts. What I'm looking for is pull back to this area and reaccumulate. I see a reversal already up here. Why? 98,000 contracts. 98,000 contracts. That's not a small amount. And we're already at the top of the daily. Look like a top, right? And it overshot a little bit up here. So possibly this will initiate some type of lateral movement and a break to come back down into this area for reaccumulation. If it comes back down, if it breaks, and I'm looking like it needs more, maybe a little green bar and then a bang down. It needs to take out this 56 and 55, and then I'm confident that it can come back down here where we look for reaccumulation and see what happens. Otherwise, I don't know. We may go lower, I don't know. But I know this is heavy selling pressure. There's initial support right here. After that, it's here. So just have to wait for tomorrow's action. But I'm really liking this 45.50 area because look over here. 45.50, you have a POC, you have a nice support line, and it has not been pulled back into yet. It's going into the first pullback, and that's where you had your initial reaccumulation on a lower time frame basis, or lower, intraday accumulation basis. See that? The 58, boom. Right? So it makes the base. You can see the line of support right here, 44.24, 4.29, 2, blah blah blah, and boom, right there. How you know this is reaccumulation, right? Well, you all know about effort reward, I presume, right? So when it's coming down, you have a big print, and look at the total volume, 85,000 contracts in this little area. Why? Bag holding, effort reward. How do you confirm? Price direction with a thrust afterwards, which occurred right here. Boom, right there. So accumulation and initiation into markup. Here, possible distribution. How do I know too much selling? That's a change in behavior. 98,000 contracts, biggest red print in this entire cycle. In this markup, this is the biggest red print. Yeah, it's end of day, maybe that's why, but I don't care. I mean, it just needs to maybe pull back a little and then break. Then you take counter trend all the way down into this reaccumulation area. So let's see where it goes. Last time it held support at 45.30, and then 45.50 or 40, around 45.40. So last time 45.30 and then 45.40. So I'm want to see a break into those areas and reaccumulation there for another move up. We'll see if it happens. Tomorrow, by the way, not like a week or anything like that. All right. So let's take a look at gold and crude. All right, daily up. Not really uptrend, but right now it just broke out, right? So it took out this high here on gold. So gold, taking a look at two levels. Here we see higher high, base breakout here, very nice and strong. Here, a lot of volume, right? Because it's breaking out above this high, about that 1975 high, breaks it. It clears the path. Clears the path for higher highs. Okay. Now, over here we have a rotation, meaning a break and a pullback. Pullback into the test of the breakout, which we are testing right here. So we'll see how this is handled. If it reaccumulates here or not. If it doesn't reaccumulate, it can continue. If it reaccumulates, it has a chance of continuation. So you just take a look at that. And if it breaks through, then taking a look at 1965. 1965, right there. 1965. Where the hell is it? Yeah, all the way down here. So we'll see if it reaccumulates here, breaks out long. Otherwise, if it messes up, all the way down, take the short into 65 and see how it handles 65. There's a POC, volume, blah, 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 all of that there, right? And you have this, look, heavy 31,000 contracts traded right there on top of another 30,000 contracts traded right there. And look at the background. All buying breakouts. They get shaken out, some of them, here on this lower low, buy it again, take it higher. Okay, so that did gold. Now let's take a look at the crude. All right, so crude, again, there's no question, this is going up. Right, look at the strong rally. I don't know what's going on here with all this background base. So it pulled back to test the base, the base of the higher high here. When it pulled back, it reaccumulated right here. You see the base? See the higher high? Heavy volumes, pull back, test, retest, and go. All right? So here's a lot of volume. I don't know why there's so much volume. What's going on here, but this 248 end of day is pretty high. So we'll see how this is handled, but I would be careful of any shorts simply because there's a base right here and it's breaking out. If you see the volume here, 157, and it's taking out that high and all of that, so if it pulls back here and look for reaccumulation at 75, it may come all the way down to 74 into this area of prior reaccumulation. You see it very clearly, folks. Look at this. What do you think this is? Boom, 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 higher high. Base, higher high. Base, higher high. Base, accumulation. First higher high, markup bar. Entering what? Markup phase. What does markup phase have? Higher high, higher high, higher high. Now look for a rotation down for reaccumulation and continuation back into markup. All right, I'm done. All right, so this is just one style. If you want to use daily, hourly, 5-minute, or whatever, you can do that. It's just I cannot see the detail that I can see here, and I'll give a lesson and I'll explain why. Let me show you something. All right, so here is what, again, folks don't talk about or they haven't realized. But in trading, right, there's a big psychology component, right? Psychology. But basically, this is fear. All right? It's fear. Now, where does fear come from? Uncertainty. In general. Uncertainty about whether you're going to get filled. Uncertainty about whether the market will go from your price to the price target. Uncertainty about direction. Uncertainty about where exactly to put your stop. Uncertainty about a lot of things. So all that FOMO and all that is all fear. Uncertainty about whether it's going to break out or whether it's going to stop out. Uncertainty about whether the trade is going to go to your target or much, much higher. So all of that is fear. So look at the hierarchy. Fear comes from uncertainty. What is uncertainty? Is not knowing. Uncertainty is basically not knowing. right? So fear, uncertainty, not knowing what? Not knowing will eventually come from not knowing the details, not knowing the big orders, not knowing accumulation, not knowing the data. And what does that mean? It means you can't see. Can't see. What is the can't see all of that information, right? Because it's, you can't see it, you don't know it, you don't know it, you're uncertain, fear. Can't see, it's a fucking candlestick. The candlestick is not giving you actual data other than high, low, close, which is totally useless in the market like the ES. I mean, I don't see how you can accurately. Maybe some can, I don't know, but I rather see, 100,000 contracts were traded here instead of a wick. I'm just saying. I don't know about you, but this is all of this is built off of candlestick. Can't see big players. Volume. Big players, we call it demand, supply, right? Can't see supply, volume, whatever you call it, volume, right? So not knowing if I'm trading with them with any edge. Not knowing, or I don't know, not knowing if it's going to work, not knowing if I'm trading with any edge, etc., right? So this leads to uncertainty, which leads to fear. Now take a look at this hierarchy and how it works. All right? Good. Now I'm not saying candlesticks are bad or anything like that, but I'm just saying they just don't give enough information. That's all. All right? So it starts off with candlestick or any chart that doesn't give you info. Right? So candlestick, you can't read the buying, selling, volume, pressure. You can only read, okay, is the bar big, greater, is it a pattern? Because candlestick is creates patterns, and you think, okay, this is a key reversal, or this is the fucking, what is that? Which I hate, engulfing, right? Everyone uses that. All right, so this candlestick, you can't read the buying, selling, volume, pressure. A lot of it you can't read. In fact, if you look at intraday charts, their volume is almost useless. On a, if you lose a 2 minute, 3 minute, 4 minute, and even 5 minute, if you look at time-based volume, it's ridiculous. It's very hard to decipher. And that is actually the premise of the Weiss wave, that because it's hard to decipher the volume of individual bars. Why? Because when price or volume, when volume is broken up into 5-minute intervals, you cannot read the buying and selling pressure. That's the premise of the Weiss wave, is that as you break down volume entering the market into intervals, you lose the force of the buying and the selling. That's the premise. All right, so this is the problem. You can't really read the buying and selling volume pressure, so you can't read the supply and demand of the candlesticks. Therefore, you can't see big players' demand, supply, and volume. Therefore, you don't know if I'm trading with any edge or whether I'm trading with the CM. Am I trading with the on the right side of the market? Therefore, it increases uncertainty, and that leads to fear, and actually also leads to losses. I would have to say, fear and losses. So this is the what's going on. This is what the public, or what we go through. There's not enough data, or not clear data on the chart, on a regular candle chart, even a bar chart, on an intraday basis. A little bit different on the daily, because daily volume is good. Daily chart have daily volume. You have a start of the day, end of the day. That volume is meaningful. It's not chopped up into intervals of 5 minutes, which are random intervals, because you have a start of the day and an end of the day, a natural start of the day and end of the day, and not a fictitious breaking up of the interval into any time period. It's an actual real, start and end. Anyway, so you have the candlestick, you can't read the pressure, then you can't see big players, then not knowing. Not knowing leads to uncertainty about whether I'm trading with the CN, and that in itself leads to fear and losses, right? So what does this mean? Now that you understand this means you gotta do something about this. Why? What is the root of the problem? Right there. Intraday candle or bar charts are very problematic. Now, I'm not saying that you can't use them, but I'm saying for a lot of folks, this, including myself, this is the root of the problem. It just doesn't give you enough information. It just doesn't. So you have to supplement it. And the way other traders dealt with this issue, they came up with the Weiss wave, right? That's one, at least from a Wyckoff perspective, that's the solution that came from this problem. That was the solution. Right? Now, the other solution is order flow or footprint chart. That's solution number 2, is order flow and footprint chart. Why? It gives you the details so you can read the buying and selling pressure. And hopefully, then you can see the big players, supply and demand, and you will know if I'm trading with them and therefore I have an edge. Then it increases your certainty and confidence, right? And that leads to the reduction of fear and the reduction of losses. Okay? All right, that's all, folks. Take care. Bye.